Recently, we started our series on ETF investing using tech stocks and tech-heavy ETFs for illustration. Today, we look to the ETF world for insight into constructing a dividend stock portfolio. First, some basics. A dividend is a payout companies make to investors once a period, quarterly, monthly, annually, or as a one-off special dividend from their profits. We'll discuss monthly dividend companies later this month. Just because a company pays a dividend doesn't mean it's a strong investment. You still have to research the company itself, apart from the dividend. From there, you must look at the quality and sustainability of the dividend. We'll tackle that relatively complex element of dividend stock investing later this month too. When we get there, we'll talk a lot about dividend yield and payout ratio, two key metrics to consider when assessing dividend stocks. Here at The Juice, we like to classify dividend stocks by how consistently they increase their dividends. A reliable dividend matters partly because the cornerstone of dividend growth investing is compounding. As you collect dividend payments, you reinvest them into new shares of stock. Over time, this can produce exponential compounding growth. Here are our classifications. First up, we have dividend achievers, stocks which have increased their dividend payments for at least 10 consecutive years, e.g. Microsoft, which has a 20-year streak. Next up, we have dividend contenders, companies who have increased their dividend payments for between 10 and 24 consecutive years. So again, Microsoft is a contender as well. The next category are dividend aristocrats, listed organizations that have increased their dividend payments for at least 25 consecutive years. At the moment, there are 68 dividend aristocrats, including Realty Income, NextEra Energy, and Church & Dwight. Industrial conglomerate Dover is at a chart-topping 67 years. And last but not least, we have dividend kings. Some companies are both aristocrats and kings as long as they've increased their dividend payments every year for at least 50 consecutive years. These, including Dover, are 48 dividend kings. Others include Coca-Cola, Johnson & Johnson, and PepsiCo. Looking at all these individual stocks and deciding which ones and how much to buy can be confusing, and this is where ETFs come to the rescue. In the last Juice newsletter, we break down this alpha proposition for you, so sign up if you want more info in your inbox.